Hi there, welcome to Market Call. Kim Bolton is on our show today, President and Portfolio Manager at Black Swan Dexteritas. The topic, technology stocks. 1-855-326-6266 is the number to call, or email Kim right now, marketcall@bnmbloomberg.ca. Great to see you, Kim.
Great to see you.
How would you characterize September so far?
Sort of like August and a fair bit of July. It's sort of been in a range bound, right? Mm-hmm. You know, if you look at the S&P or the NASDAQ, you know, it's just sort of either side of the 50-day moving average, and it's kept in that band about like 1-2% above or below. So it's hopefully today we get a breakout. I don't know which way it's going to go, but you know, the ingredients, the recipe is there for a breakout, either higher or lower.
Why do you say that? I mean, you can see where it could go lower, I suppose, with this much more expensive cost of capital for corporations.
Well, it'll all come down to the presser that Jay Powell has at 2:30. And if he's more hawkish, yeah, you'll probably get a test on the downside. But if he's less hawkish, maybe you get a bit of a rally here. But you just got to break out of that range, you know, the 2% above or below that 50-day moving average. It's sort of held there really since about the middle of July. That's a better part of 7 or 8 weeks.
Let's put up a one-year chart maybe for the NASDAQ.
Yeah.
And maybe we could follow that with a chart for NVIDIA, NVDA. So there's, okay, so you can see certainly the NASDAQ has been going sideways for quite a while now. Yeah.
After that big surge in the first part of the year, yeah.
NVIDIA, is the AI mania, if I can call it that, or the AI enthusiasm, has that finally died down?
I don't think so at all. It's interesting. You know, it was a year ago, just around now, that we had a program, and I talked about the generative AI, that it was maybe the next catalyst that would come for the technology arena. And lo and behold, that's what happened. But it's certainly matured because you know who the players are. You got the hyperscalers with the cloud. You know, everyone has to get into the cloud. And then you have the processing guys like the NVIDIA and the AMD and then Intel coming in. And then you got the software stack. So it's all sort of coming together, but you can definitely see who the leadership is. And with interest rates high and potentially going higher, you really have to stick with the big names that have the deep pockets.
Right, yeah, because it's going to be quite the battle for AI supremacy.
Yeah, but I think you've sort of carved it out. You've certainly carved it out with the hyperscalers, you know, the AWS, but you've even had Oracle come in and Azure and Google and so on. But Oracle, and we'll see it later, has actually made some great inroads into the cloud side. And you certainly know who the leadership is on the processing with NVIDIA. But in 2024, you're going to have the new chips coming out from AMD and also Intel that are going to be quite competitive.
Okay, well, we're looking forward to this. Kim Bolton is here to answer your questions on technology stocks. 1-855-326-6266. Daniel has sent us an email, is asking about Converge Technology, CTS. What do you think?
We follow it. You know, it's a $600 million market cap company, currently trading right around $3. The average analyst has a 12-month price target of $4.95. So they provide software-enabled IT and cloud solutions. And they're very much sort of a reseller of Microsoft software. And so they go out and they input the Microsoft software into various enterprises out there. It's extremely competitive in industry, but they're regional, so they're not going to explode into the next global software maker out there, but they're very regionally focused, very good at their customer service. So we like them. However, they're not profitable. That's the problem. They had a net loss back June 30th of $4.5 million, and it sort of reflects over into the price action that is going on. Now, they had some special charges that consist of restructuring related expenses for employee terminations and lease terminations and restructuring costs. So hopefully they'll come back to profitability.
Okay, but it doesn't sound like the stock is calling to you right now.
No.
Okay. Greg has sent us an email, wants to know about Nuvei. What's your outlook for this payment technology company?
So currently trading right around $23.50. The average analyst has a 12-month price target of $30.50. So Nuvei is a leader here in Canada in payment and processing and technology solutions for merchants and partners and so on. But then they ran into a problem, I think it was back in June, when that Spruce Point group came out and actually talked about how there were some discrepancies in their financials, and you can see that, it was a major sell-off. That was that Spruce Point Capital Management.
Alleged, I guess we should say. I don't know if any of it was...
Right,
anyway, sorry,
right.
carry on, yeah.
So, they came out with a story back in December of 2021, then they came out again in April of this year, and it just sort of rattled. It's frightened a lot of the retail side. I don't think it really sort of frightened the institutional side. Great company, but they're just going to have to prove themselves over the next couple of quarters.
Okay. We have, I think it's John on the line. John, go ahead. Or maybe... Oh, I beg your pardon. It's Surimber. Sorry about that, Surimber in Markham, Ontario. Go ahead, please.
Sir, my question is about Enghouse. Is it time to put money in?
Enghouse, thank you.
We like this company. We don't own it, but as a result, we do follow it, and it's very much involved in acquisition, and it's sort of like a mini Constellation, but it's sort of come back down because it's just digesting a lot of its acquisitions of late. So it's an interesting company, but we don't own it right now.
Okay. John in Kingston, Ontario. Go ahead, John, please.
Yeah, hello, Andy and Kim. Sound like a singer from the old days. I'm wondering if it's a good time to get into a high-tech ETF, or rather I should wait for a pullback.
Okay.
Yeah, thanks for taking my call.
Thank you.
Thanks a lot for the call. It's a great question. I'm not a big fan of the ETFs because there's a price to go in and a price to go out. I'd suggest buying into the BSD Global Tech Hedge Fund. However, if you go back to what we were just talking about on the outlook, it sort of looks like, for the remainder of the year, maybe going into 2024, you could be sort of range-bound. You've been range-bound for the last 8 weeks after the big run in the first half of the year. And so you just have to be able to, you could buy the triple Qs, or if you have access into the futures, into the NASDAQ futures, that's where I'd play it. But you have to be able to follow the charts, because if you're range-bound, it's very technically driven. And so you buy it at the low, and you have to know where the resistance is and where the support is. So, I'd actually participate in the triple Qs here. But you got to trade it. It's not an investment. It's not an investing environment.
Right. Triple Q, of course, the ETF that tracks the NASDAQ 100. Yeah. Okay. Thanks very much for that question, John. Daniel in Markham, Ontario. Go ahead, please.
Hi, Andy. Hi, Kim. May I have your thoughts on Palantir? At what price would you buy it, and your price target? Thanks for taking my call.
Thanks a million.
So we haven't participated in Palantir in quite a while, actually, since I guess it was a couple of years ago that they actually came out and did their issuance. And so Palantir, they're very much an attractor of really good client out of Silicon Valley in the artificial intelligence side. And they sort of had two units. One is the Gotham, one is the Foundry. Gotham services government agencies around the world, and the Foundry side is more of an enterprise data systems out-of-the-box type thing. Tremendous market cap out there. But they've had some issues. You know, they had some issues when they IPO'd because, you know, when they attract talent, they have to actually offer options, and so a lot of the options were putting a cap on it. And then they got involved with a few of the SPACs out there in acquiring companies, and then. They have a number of multiple class action lawsuits as a result of those SPACs. So that's sort of on the con side of it. On the pro side of it, you know, definitely they're having rising profit margins. They have great free cash flow. They actually announced most recently in their earnings that they were going to do $1 billion buyback. They got $3 billion worth of cash on there, and they're very much a leader in that software stack. Finite number of clients, big clients, about 60% of their revenue actually comes from 20 clients, but they're very, very sticky clients. So currently trading right around 15 and a half-ish. The average analyst out there actually has a 12-month price target of about $14.25, which is below of where we are right now. However, it was back at the end of last year. You know, it was down in sort of that $7 to $8 range, which was great value. Right here doesn't express as much value. You know, the intrinsic value is certainly lower than the actual current price.
So you wouldn't be rushing out to buy it?
Not right now.
Okay.
However, if you can get it in single digits, definitely. But I think if you can get it down around, you know, sort of between 12 and 13, but that, you know, that's a $3 haircut from here.
Okay. Kim Bolton is taking your questions today on technology stocks. 1-855-326-6266. Taraver is still in Sierra Vista, Arizona. Go ahead, Taraver.
Thank you, Andy and Mr. Bolton. My question is on Alphabet Google. And now I know they make most of their money on search engines. That's fine. But they're a distant third when it comes to the cloud computing infrastructure like Amazon's AWS and Microsoft. My question is, in that part of the business, do you ever see them taking a leadership role and a high profitability? Thank you.
Thanks.
Trevor, great question. So they sort of make most of their money out of search, but it's actually on advertisements, right? It's like 85% of their 80 to 85% of the revenue is they get from advertisements, but that's on the search engine. But you know, Trevor, they have so many horses in the race. Yes, on the cloud, but also on the services and you know, on the other bets. You know, just wait until Waymo starts to produce some money out there too. So are they going to be competitive within the cloud side? I would say that they already are, because they are number 3 out there. But the one that's actually sort of biting at their heels right now is Oracle. Oracle has done a fabulous job, and they actually have, you know, a lot of the software stack involved in there, and so that's where they've sort of crept up behind Google. But I think, you know, it's interesting, Trevor, when you look at the, you know, the AI revolution, and Google is actually very much a leader together with Microsoft in the AI space. So I think with those services in generative AI, that they will do extremely, extremely well. They're, in our fund, in our separately managed accounts, Google, Microsoft are definitely in the top 5 of our holdings through the accounts and also through the fund. So, yeah, and every time they report, they reported back in July 25th, and they just blow it out of the water. They did $62 billion worth of revenue. Imagine that.
This is Alphabet.
In one quarter.
Yeah.
And the expectation was about 60.
Yeah.
So they beat it by $2 billion. On the earnings,
The sheer size of this company. Yeah.
It's massive. And on the earnings side, they were expecting $1.32. They came in with $1.44. So they constantly do extremely well in it. Now, mind you, the thing you always have to watch, if you ever get into a recessionary environment, the advertising is going to come way down, and that's the majority of the revenues. And so that is the big question with Google, on whether we enter into a recession. It seems like a low probability right now, but you always have to sort of keep that in mind.
Let's head to Bowmanville, Ontario. Go ahead, Bob.
Yeah, good afternoon, guys. I'd just like to ask about Amazon. I know it's had obviously a good run 6 months year to date, but just on the 1 year number, it's only about 12%, which, I don't know, seemed a bit low to me, but that's just maybe a function of time or, I know lots of people love Amazon as we do, but just kind of your comments there, if you don't mind.
Mm-hmm. Thanks, Bob. Well, you're hitting all of our largest positions, and if you think back to what Andy and I were talking about on the outlook, with the inverted yield curve out there, high interest rates, you really have to go to the growth stocks that have the deep pockets, like the Microsoft and the Google, and then of course Amazon. Amazon currently trading at about $137.23. We have a 12-month price target of $164.85. So, like those other fellows of Microsoft and Google, they just have so many horses in the race. Tremendous free cash flow. It was just announced today they're going to hire 250,000 people going into the Christmas period, 250,000 for the fulfillment side. So they're just an amazing company. It provides on the compute side, the storage side, it has the fulfillment side, total addressable market, that everyone talks about. How far can a company go? With Amazon, the runway just keeps going on and on their total addressable market. So really, Bob, we really like Amazon. It still has lots of runway left, even though it's had a great run.
Okay. We've got Ron in BC on the line. Go ahead, Ron, please.
Oh, hello, yes. My question's on Keysight Technologies. I've owned it for about 18 months and not overly impressed with it, so I'm just wondering what your thoughts are on it. Appreciate it. Thank you very much.
Thanks very much for the call. Keysight. So Keysight, it provides electronic design and test solutions for commercial, communications, networking, aerospace, defense. So they're a measurement company, but a modern-day measurement company. Currently trading at $132.97. We own it. We trimmed it back a little bit. They had a difficult last quarter on the earnings, and so but we're still fully engaged with them, and it's got our 12-month price target is $187.70.
Okay. We are going to take a quick break. We'll have a look at Kim's past picks when we come back. Kim was on our show October 13th of last year. Adobe was your first idea, and this one doing just fine. Seen in part as an AI play.
Yeah, as we were talking, it was a year ago now that I was talking about the generative AI, and the past picks are all geared around that. So, Adobe, if you talk to most analysts, it's usually, certainly if not their top, it's certainly in their top 5 picks when it comes to generative AI. And they've really sort of excelled. It's currently trading at 546, but it still has some runway left. We have a 12-month price target of 605. And, they just reported, what's today, the 20th? So it was 6 days ago. And, they beat on the top, they beat on the bottom, and everything is going great. And then they actually brought out the Firefly package, which is their new AI package. And so everything is just humming perfectly for them. So myself, we're fully loaded, but if you, we have about a 5.5% position through most of our portfolios in Adobe. But I'd suggest you can buy it here. I always sort of like doing it in thirds, so you buy it here right around 530. Buy it down closer to 500 for another third down at 475.
Okay. Salesforce, let's see how this one did. Presumably economically sensitive, but again, seen, I think, as an AI play potentially.
Absolutely. And it's, these two, both Adobe and Salesforce, are in that software stack. And so Salesforce is the king when it comes to the customer relationship management side. They just reported again, currently trading at about 215.5. Still got some runway left. We have a 12-month price target at 242.75. I don't know, what else can you say about a company like this? It has, its margins are running right around 40%. Revenues are up year over year, anywhere, depending on the different parts of the company, anywhere from 10 to 12%. They just came out with their Einstein AI side of it. So they, and there's 2 parts to that. One is the Einstein Copilot, which is sort of like a chatbot. And then they have the Einstein Copilot Studio, which is more designed toward creating AI-powered apps and also into websites and so on. But both, the Copilot and the Studio, you can get it all together in the Einstein Trust Layer. And then, they keep doing these collaborations with various companies around. They just entered into a collaboration with Genesis, which is a leader in AI-powered experience orchestration. So love the company.
Sorry, we're tight for time.
Yeah,
Oracle, yeah. I know you're excited about this story, including their growing presence in the cloud, return of almost 80%.
Yeah. So currently, it's still got some runway left. Currently trading at about just over 114, 12-month price target of 126. They, of course, have also got into a lot of collaboration with various companies, particularly with NVIDIA. And then they've come out with more and more of the AI powered capabilities with their, it's called Oracle Fusion. And they just reported back on September 11th. They beat on the top, beat on the bottom. They've expanded and they've done a collaboration with Microsoft Azure. They're very much in bed with them. And actually, they're now, when they reported, everyone sort of thought that their earnings were a little bit shy, but it really came down to the whole. Remember, they acquired Cerner, which was the health medical company, and they just had not brought them on, and it had sort of been factored in. So I think it's actually a tremendous buy here.
Okay. We're going to be back with Kim Bolton. He's taking your questions on tech stocks, 1-855-326-6266. Linda is calling from Edmonton. Go ahead, Linda.
Oh, good afternoon. My question is on Snowflake. I bought it at the end of July at $170. I'm down 5% right now. I know it's data warehousing and that it has users of AWS, Google, etc. I'm wondering, was this a good buy, and is it a long-term hold?
I didn't catch where you bought it, Linda.
I think she said she's down about 5%, if I heard her right.
Yeah. So it's currently trading, right around 159.55. Linda, we have a 12-month price target of $182, so there's still very decent runway. Just to remind everyone, Snowflake, it provides cloud-based data platform for various organizations internationally. Its platform offers this data cloud that it enables customers to consolidate the data into a single source of truth and drive sort of meaningful business insights. It's very data-driven applications. It's been around not that long. It was originally known as Snowflake Computing, and in April of 2019, they changed the name just into Snowflake Inc. When you look at their most recent earnings back on August 23rd, they blew it out of the water on both the top and the bottom. And they've actually been able to, they partnered with NVIDIA to provide businesses of all sizes with an accelerated path to create customized generative AI applications using their own proprietary data. And so we really like them. We have a smaller position. It's in around 2.5% in the fund. And yeah, you could buy it here right around that sort of 159.5, add to it down at 151.5, and there's a lot of support down just around 142. So just buy it in front of that, like around 143.
Okay. We have Jennifer on the line from Markham, Ontario. Jennifer, go ahead, please.
Yes, good afternoon. I'm calling regarding ARM, and I am wondering if you could give me an entry price. What is a good entry price? And what's your opinion on Apple and NVIDIA taking, a stake in ARM? Where do you see ARM going in a year or so from now? And if ARM issues more shares, how will that affect, the current investors? Thank you for taking my call.
Thank you.
Thanks, Jennifer. We don't own it. I did want to sort of take the call. Well, I wanted to take the call because, it's an IPO. It was in the last week. And, it popped on the first day, sort of came back over the last couple of days, about 5%, which is sort of typical of what these kind of IPOs can do. Jennifer, I would actually let the dust settle, check into when the lock-up period will expire, and you sort of have to drill down and actually find that on who actually are the biggest players. SoftBank can still, it owns 90% of it. Is it 90%? It's right up there. But so Jennifer, I'd let it play out. It's a really, really interesting play. But these sort of IPOs, you sort of have to let the steam roll out of it for a little while.
Okay, so you wouldn't be jumping into it.
No,
right now.
you know, we didn't get involved in the IPO. There are, you know, better risk reward situations out there, but we're following it very carefully and you know, wait for it to actually go through a couple of earnings seasons.
Oh, okay. Jennifer, thanks for that question. Jerry is in Kingston, Ontario. Go ahead, please.
Oh, thanks for taking my call, Andrew, and good job on those past picks, Kim. Just a quick, I think the ARM hold-up is 180 days, but not sure.
Okay.
Anyway, speaking of better opportunities, I'm calling about Broadcom. I bought it for my son a few years ago, and it's grown to an oversized portion in his portfolio. But every time we go to trim it, it's like it winds up sort of blowing past what we're going to sell it for. So I'm thinking now with the VMware acquisition and, you know, its AI connections and the fact it trades at a very reasonable multiple, I'm thinking, you know what, just let it run for another year, see how the consolidation goes. And so curious about your your price target. And one generic question, when you give your just...
Oh,
I think we lost him there. Broadcom, anyway.
Oh, I was waiting for that
Yeah, I know.
interesting question.
I know.
We're on the edge of our seat here. So currently trading 847. You'll be happy to know that actually our 12-month price target is $996.75. So, you know, it still has a very, very good runway ahead of it. Just for everyone else, you know, Broadcom designs, develops, and supplies various semiconductor devices with a focus on sort of the complex digital and mixed signal complementary metal oxide semiconductor side. So what it really does in layman's terms is that they have a system on a chip. Mm-hmm. And the system on a chip box, and you know it's great for passive optical networking, central office, consumer equipment side. You know, 75% of Broadcom's revenue comes from semiconductors, but 25% of their revenue actually comes from infrastructure software. So we still like it. We don't own it in the fund, but we actually own it in a few of our separately managed accounts, mainly because you know it's a leader and it actually has a very, very decent runway, and it's not as expensive as some of the other semiconductors.
We're going to be back with Kim Bolton. He's taking your questions on tech stocks. 1-855-326-6266. Peter is in London, Ontario. Go ahead, please.
Calling about NVIDIA. I guess maybe we know everything about it, but maybe you could talk about the CEO, Jensen Huang, and how much his view and future outlook determines where NVIDIA goes and how he's so competitive that he won't let anyone else take over the space. Thanks very much. Have a good day.
Thanks, Peter. So NVIDIA currently trading $435. We have a 12-month price target of $503. Now, to us, that doesn't mean that you know you just sit with it and invest it. What we've found with NVIDIA, because it is so popular, both institutionally and retail side, it is sort of tradable. So keep a core, but you can actually trim it around the edges as it goes up and as it comes down. And it's a great moneymaker. It's also maybe trimming it around the side, you know, selling some short-dated puts, which we've done on NVIDIA, allows you to actually pick it up because, you know, perhaps you'll take delivery of it. Mm-hmm. The volatility is there, and so you get pretty decent premiums when you sell those sort of short-dated puts. So yeah, we have a 503 12-month price target. I think it's going to be a really, really interesting time going into 2024 because NVIDIA is going to have a lot of competition. You're going to have the likes of certainly AMD and Intel, if not some sort of other more minor players out there. I'm very impressed with the delivery of Gesslinger over at Intel, and his promises that he's done on the foundry side, I think is going to translate over into the accelerator chips out there and the new advanced packaging that Intel is going to go. We're very much recommending for those that have NVIDIA and want to build a position in there, actually pick up both AMD and Intel together with their NVIDIA. Because, NVIDIA is pretty well sold out into second, third quarter of 2024. And so there's certainly lots of demand, and you're going to have supply coming on with the likes of AMD and Intel. So I hope that helps, Peter.
Okay. Mary in Vancouver, go ahead, please.
Hi, thank you for taking my call.
Pleasure.
I would like to ask about the Taiwan Semiconductor. It seems to be doing very well in the past, but it hasn't been done well at all. So what's your opinion on the future, whether to keep it or sell it or go somewhere else?
Okay.
Thanks very much, Mary. So Taiwan Semiconductor, TSM, currently trading right around 88.5. We have a 12-month price target of $107.40. So it has a very, very decent runway ahead of it. So Taiwan, biggest foundry manufacturer of semiconductors, certainly for all of the designers out there, like AMD, like NVIDIA, and it actually has, depending on who you talk to, between 50 and 55% market share in the manufacturing of in the semiconductor foundry space. But it is, as you can see in the charts, it is very, very tradable. If you can pick it up down sort of with a 70-something handle on it and you sell it anytime it gets sort of above 110, but keep a core position in this. Taiwan Semiconductor is going to be with us for a heck of a long time.
Well, we're out of time. I can't believe it. We are going to get top picks from Kim Bolton next. First idea, Intel. You said already you like what the CEO is doing.
It's funny with when I got together with the team and we were going through sort of what the top picks were, and everyone convinced me that we should do Intel, and we've been building a position in various portfolios. I never thought I'd say this, but because if you go back over the years, Intel is always sort of disappointed. But if you go back, gosh, 5 to 10 years ago, they were the king of the hill. But then, they just weren't delivering. But now, Pat Gesslinger, who's the CEO, I guess he's been around for a couple of years ago. He's just executed. He's told the analysts what the milestones are, and he's delivered. So there's a lot of good things that are happening within Intel. Currently trading 35.5. So you can see it on the chart. It actually rolled over. They're having their big annual conference in San Jose this week, and it's called the Innovations Conference. And late yesterday, when the CFO came on, he just wasn't as upbeat as Gesslinger and some of the other guys. And so it sort of rolled over. I think this is a tremendous place to actually buy it, down around here, around the sort of 34, 35, 36 level. And we have a 12-month price target of $49.50. So Intel, it's in the manufacturing space. So they both design and they also manufacture, which is unusual out there. I guess not many others, like when we were just talking about Taiwan Semiconductor, they don't design, they just manufacture. And so Intel has a lot of fascinating things that are going on. They've come out with this Gaudi and the new AI accelerator chip that will actually be very, very competitive with NVIDIA's. So they have these Gaudi AI chips and then the Falcon Shores GPUs. And it's it's more energy efficient than NVIDIA's, has everything going on. I could go on and on because they also have some advanced packaging that's going on and actually how they stack the transistors and the chips together. So tremendous opportunities. And I never thought I'd say this, but I think they're going to do very, very well.
Visa, sorry, Kim, to cut you off. Visa is your next idea.
Yeah. So Visa, you're never sure whether you're going to end up going into a slowdown, heaven forbid a recession. Visa is a good choice when it comes to sort of recession-proof. But it's not just a credit card company. It's a global payments company out there, currently trading right around just shy of 244. We have a 12-month price target of 281.5. And so it just has a lot beyond just sort of the credit card. And Andy, it's $500 billion, $500 billion market cap. And, it reported back July 25th, they beat in the top, beat on the bottom. Their growth rates are great. Payments growths are 10%. Processing is 10%. International transactions are up 15% just in the quarter. Data processing is up 15%. They've done a lot of collaboration. They got in with this group called Confirma Pay, which is really extending their strategic partnership and enhancing sort of the whole Visa commercial pay side of things. They got in with a company called PaySend, which are sending real-time money to Visa cards out there. So there's a lot going on in Visa land.
Okay, we better move you on here. Applied Materials, a supplier to the chip industry.
Yeah, the equipment suppliers. So you got the names of Applied Materials. You have ASML, which is on the lithography side. Applied Materials has actually got into the lithography side now, and so it supplies the equipment, services, and software for the manufacture of semiconductor chips and for electronics and flat screens and so on. Currently trading just shy of 139. We have a 12-month price target of $156.60. It's international. Most recent earnings beating the top, beating the bottom. They just announced that they're going to be launching this multi-billion-dollar research and development platform in Silicon Valley that is driving the semiconductor innovation side. So they just have a lot going for them.
Kim, thank you very much indeed.
Okay.
Let's have a look at the markets before we go. We are, of course, going to get that U.S. interest rate decision at 2 p.m. The Fed widely expected to leave interest rates unchanged. Then at 2:30, Jay Powell, the Fed boss, has a press conference. There may be more indications there of how concerned he is about oil not far off $100. Well, let's just say above $90. Still a ways to go before North American oil gets to $100. Let's see how the TSX is doing today. It is holding in. Generally, the energy stocks have not kept up with the sharp rally in oil in recent weeks. May imply that equity investors aren't convinced these high crude prices are here to stay. Let's have a look at oil. It dipped earlier, that went up, and now higher again. We got a report from the U.S. Energy Information Administration indicating that U.S. oil inventories are sliding. And at Cushing, Oklahoma, the level has got so low, they may even have physical difficulty getting oil out of the bottom of the tanks because the pressure has dropped so much. And let's have a look at the U.S. dollar. Of course, if Jay Powell threatens to raise interest rates again today, it'll tend to lift the U.S. currency, but it is down about 5% in the past year. I'm not sure if we have time to have a quick look at Shopify, that affiliated company. Klaviyo started trading. Shopify owns a bunch of shares in it, and Klaviyo started trading above the IPO price, sharply above the IPO price. Which is great on paper for Shopify. Anyway, thanks very much indeed for watching Market Call. Christine Poole is up tomorrow.